Hey everyone, thanks for tuning in this week. I wanted to discuss with you some of the investment trends that we saw for the week of September 25th, 2023. So we are closing out a difficult month of September for stocks. So as of Friday, the S&P 500 will finish out the month down around 4.5%, and the NASDAQ will close the month down about 3.4%. So this is the worst month that we've seen for these two stock indexes for the year 2023. The focus on trading on Friday would be the PCE report. That is an inflation report that comes out Friday morning around personal consumption expenditures. This is an inflation report that the Federal Reserve keeps a close eye on. So part of the reason that we saw a big pullback in stocks is due to the Federal Reserve meeting last Wednesday. So that was Wednesday, September 20th. Fed Chair Jerome Powell came out and said that he anticipates interest rates remaining higher for longer. He also anticipates that they will have less interest rate cuts next year. He believes that the Federal Reserve can maneuver a soft landing, meaning that they can bring inflation back down to around their 2% target without drastically cutting or reducing interest rates. So this led many economists to believe that we will see a pretty drastic slowdown in the economy next year. However, a lot of people still are saying that we will not expect to see a recession next year. They do think that the consumer will start to feel the pinch. They'll start to feel the pinch from higher interest rates, rising gas prices, higher mortgage rates, and also student loan repayments. So they believe that this could have a dent in consumer spending and potentially slow down the economy. So as I mentioned, this caused a drag on stocks and also in particular some technology stocks as well that we saw pull back and correct slightly in the month of September. Also in news this week, the UAW strike continues. So the UAW strike is at 3 major automakers, and they did announce this Friday that they could potentially start to have walkouts at more sites and more locations. The UAW is asking for as much as a 40% wage increase over the next 4 years. The automakers have come back and countered with a 20% increase over that same time period, which they state is very competitive for what they've done in years past. The UAW is stating that these automakers have seen record profits since COVID. However, on the automaker side, they are saying that those record profits were gone back into reinvesting into electric vehicles. So again, this will be an ongoing situation. Some people anticipate that these strikes may last as long as November before any type of settlement is reached. Lastly, in a webcast this week by Goldman Sachs research team, they are recommending a less favorable short-term outlook on equities, and instead are stating a more favorable outlook for things like private credit and bond yields. So Goldman Sachs is stating that stocks are starting to see some of the headwinds because of the overvaluation that we've seen in stock prices. Also, there is competition for wallet share. So they're seeing many money fund flows into these private credit funds, municipal bonds, other short-term bond vehicles. And this is causing a bit of a pullback and a drop in stock prices. So I do agree with Goldman Sachs, but I do think that we have already seen a bit of a correction in some of these stock valuations. As you see, some of the large tech companies, their stock prices have dropped pretty drastically for the month of September. This is creating a potential opportunity to get in at these good long-term holdings within your portfolio at more attractive rates as these stock prices have come down. So again, remain patient, keep an eye on the stock market. There could be some good buying opportunities over the next couple of weeks to hold some good long-term stock positions within your portfolio. Thanks for tuning in today. Leave a comment, like this, share it. If you have any 2 cents that you'd like to add that you're seeing going on in the investment world, just let us know.